Let me explain to you how you can use the PO3 or the power of three with ICT concepts to increase your overall win rate by around 20%. So this all comes down to using previous day fair value gaps in line with the power of three indicator. So what do I mean by that? First of all, you want to understand where the fair value gaps were from the previous day. So in this case, we have a very, very large fair value gap over here. Now from here, we're using the power of three indicator on the 15-minute time frame. The reason I use the 15-minute time frame because as ICT says, it removes a lot of the blur when it comes to lower time frame trading. Let me explain. So here we have the Tuesday after a very large meltdown from Monday. So if I continue to play price on, we have a large expansion to the upside. Now, one question I often get from traders is how can we predict where the manipulation is going to occur? Because we know it's accumulation, we know it's manipulation before the distribution. So how do you know where the manipulation is going to end and the distribution is going to start? Let me answer that question for you. So from here, as we can see, price comes into this area before distributing lower. So this is not an accident because if we look to the left, we had a previous day fair value gap, which was mitigated pretty much to the T before price headed lower. So if we head down to the 5-minute time frame, we can dissect, or even the 1-minute time frame, we can dissect how you could have gotten an entry from this particular position. So how I would do that is number one, understanding how price behaves at this fair value gap. So from here, if we just take this in turns, we have a very, very large sell-off over here, which shows that sellers are aggressive. Sellers are in control at this zone. Now from here, we can see price struggle to break above this area. Hence, we see price wicking above it, not breaking with a body. And here now from here, we have the second break to the downside. So this really shows us that the zone is holding and sellers are in control. Notice how we have a green candle, but we're significantly above the daily opening, which is down here. This is what gives us our second overall confluence. And then from here now, we're looking to essentially catch the retest of this area. So price comes and breaks, then we retest into this area over here. So you want to have your entry over here, a stop loss, a conservative stop loss just above these wicks. And again, you want to be targeting again. Notice how we have a lovely trend line created from the London session. So this is a trend line from the London session, but really we want to be targeting the opening of that day, right? So we want to be targeting a nice 3R trade or a 3.7R trade, right? So again, we have the market here again, gives us a couple more opportunities. So we could have entered again short here. Short position, stop loss at the zone high, and we want to be targeting the daily opening price. So once we have that in place, we can see how price comes to our overall target, right? And what I want traders to understand here, the most important thing, coming back to the overall secrets, is you want to be looking for a previous day fair value gap to key off above the daily opening price.